What's good, people, traders, and dedicated gold chasers? Welcome back to another video at the Modern Day Trader. And today we're going to be doing something a bit different. So, recently I've been recording my trades. I've been doing some videos that's a bit of advice, a bit of just giving you tips here and there. Today, since we've taken no trades at all, today I want to take you guys through what I do every week on a weekly basis when I'm not really looking at my trades, after I've looked at my trades, or before I looked at my trades, just within the process of my weekly review of the markets. So basically, what I usually do is I'll walk through the markets day by day, session by session, the sessions that I do trade, and kind of objectively try to see where the markets could have gone, where I could have executed, what happened, and just find out exactly how I could have gotten better, right? So without further ado, you guys know I trade pound yen. So we're looking at the daily time frame. Right here, I just marked off the specific day where basically Friday of the prior week of last week, Friday the 25th, and then this is Monday, and you can see that these are the days that were our trading days, right? So pretty much you can see that Friday closed bullish. So when we come into Monday, we're looking for London session, obviously, and pre-New York session for a potential 4H bullish candle before we can actually go down onto the 15-minute time frame. So you come into Monday, you can see that the 3 o'clock candle had already closed bullish. So we have the daily and the 4H agreeing. So now all we need to do now is basically look through all other currency pairs to find out what currency correlation is. So we know that we have the daily and the 4H agreeing, and we know that we can potentially look for buys in the next session. So from that, we're going to go through all other pairs. Let's see what it pound yen was bearish, EJ bullish, CJ was bullish, AJ, but UJ bullish, AJ. What was AJ? 249 to AJ was bearish. So we only had the daily and the 4H agreeing on pound yen. That's just some studies we have put there. So now we know that we can essentially trade this. So now after that, we go to our directional bias page, and on our directional bias page we look at week 5 on a Monday, and there's 100% chance right now that over a year and 9 months, a year and 10 months actually, that actually at this point it was a year and 9 months, that the next candle would potentially play out being bullish. So we're going to drop down onto the 15 minute, and we're going to go to 7 o'clock on Monday morning. So where is Monday? The October Monday was the 28th. We go to 7 o'clock, and this is where we will see exactly what price action was doing. So you guys know I trade with two potential levels in the market, and you can see that the market actually capped on Sunday night. So we're looking for, so this is 3 o'clock, so we're going to come to the market at 7 o'clock. So quite clearly we have an area in the market right here that we're going to be looking for breakouts, and then this area was created from here. So this would be our point of interest essentially right here, right? The last bearish candle until the last point. Now you can see that this is outside of our trading zone, and we're only looking for buys, so we won't be entering below these areas here. Pretty unfortunate. It is what it is. So no real trades on Monday. And you guys can see that I'm just objectively looking at the markets without what I already did in the markets this previous week, which was absolutely nothing, to be honest with you. I took a break from the markets this week. I was keeping an eye on the markets, yes, but I wasn't actively trading. So this exercise is going to get me back into my rhythm and back into my shape of trading for next week. So you can see that there was nothing really that we could have done in this London session and London open session. So we delete the drawings. We're going to go back onto the 4H. We know that the daily on Monday is bullish. So on the 4H, let's see how the next candle closed. The next candle closed bearish. So the only real thing that we can trade right now is uh 4H correlation, right? So we're gonna go across all pairs and find if we have 5 out of the 6 pairs being bearish, then we can actually trade. You can see GU is bullish, right? So we have one pair B, then we have EJ bearish, CJ bearish, so that's UJ bearish. That's four out of five pairs so far, and AJ bearish. So we have 5 out of 6 pairs. So right now, at this current moment, uh, we coming into obviously it's this is the pre-New York session. So pre-New York, we have a bearish sentiment. Then we come to our directional bias page and 4H correlation for Monday. The fifth was we have the 69% chance of the next candle closing bearish, right? So now we drop down onto the 15-minute and we're going to go to 11 o'clock because that's when we start trading this session and we'll do our analysis to see exactly what had occurred, right? So you can see the price action had never actually broken below these areas. Now, yes, we came into that area, but we never actually broke below that area. Price action pushed down into this area. We never broke below structure. And so really and truly, our trading range was still this. So Monday, there was no real trades on Monday for us to actually execute. And it just is what it is. You have these days where you just don't have days to actually trade, right? So is what it is. We keep on moving. No trading day, you keep on moving. Let's go to Tuesday. Now, Tuesday, as per week 5, we can't trade because we only have a 40% win rate on a Tuesday in week 5. So we're not even going to necessarily look at Tuesday. We'll go straight to Wednesday. From a daily perspective, what is Wednesday doing? Now, that is Thursday. We need to look at Tuesday's previous day is bullish, right? Tuesday's previous day is bullish. Let's jump onto the 4H to see exactly what we are getting in London session. So we're going to go to the 7 o'clock candle real quick. 7 o'clock candle, or actually 3 o'clock. We need to look at this candle. So we know that the previous day was bullish. We have a 4H now that is bearish, right? We have a 4H that is bearish. And also from a higher time frame perspective, we're also in an area in the market where I know that we're in a higher time frame point of interest from a 4H perspective. So there is chances that we could push to the downside from these areas here. You can see that market structure is essentially calming down and slowing down, and we're really struggling to push to the upside. So 3 o'clock, we have a bearish candle. We can't just trade off from the basis that the 4H is just bearish, so we need 4H correlation. So let's see if we get 4H correlation. What do we have? We have GU being bearish. So we have 2 candles that is bearish. Then we have EJ being bullish. So if we have one other, okay, we can't trade that session. And the reason why we can't trade that session is because we are already only going to have a maximum of 4 candles in a bearish direction. So we move on to the next session. So that first session was a no trading session, completely no trading session. Let's check the 11 o'clock close, which is the London close. We're moving on to the London, not the London close, sorry, the London open candle, the London open 4H candle. So we're just gonna check 4H correlation across all pairs. So we have a bearish, then a bullish candle, then we have a bearish candle, bearish on UJ, and bullish on AJ. So essentially, the unfortunate thing is that we can't trade Wednesday too. It just is what it is. You don't have your bias. If you don't have appropriate bias, it is what it is. You just move on with the day and you continue knowing that there's going to be better weeks overall. There's going to be better months, better days. So just like continue moving and keep going essentially. So we're going to go on to Thursday and see what Thursday has planned for us. So Wednesday closed bearish, right? Wednesday close bearish, so we're going to be looking for a 4H bearish close at London. So let's take a look at London session. That's Wednesday, sorry. We need to look at Thursday the 31st. Thursday the 31st, so we already have daily and 4H being bearish on Thursday. That's perfect. Do we have 4H correlation? That's the question. Do we have 4H correlation? That's a bullish candle because you guys can see that the open on this candle is 489, whereas the close is 495. So that's a bullish candle. Then we have a bearish candle on EJ. That's 2 bearish candles. What do we have on CJ? We have a bearish 4H close on CJ at 3 o'clock. So that's three bearish candles. We have another bearish candle on UJ. If AJ gives us a bearish candle, boom, we have daily and 4H correlation. And just to give you guys a little overview of this, on Thursday in week 5, we have 100% potential that the next 4H candle will continue pushing in that direction. So since we had a bearish candle right there, you can see that the next 4H candle actually closed bearish. But now it's just about understanding, can we do analysis and find an entry, right? So if you go back, you can see the price action pushed to the upside. We created new structure. We shifted structure to the downside, and we are currently in and around these areas right here, right? All we looking for is, if this is, we trade around these areas. So this would be your low area, just because that had a clear and definitive push to the upside. Uh, and then what do you see? We don't trade at 5, 6, 7. So you can see we pushed down, made a low. We then came back and made a new low. So this would be your area of, like, your breakout area essentially. And that would be a good trade in my opinion. And if that is your breakout area, this would be your double top area. The only way I can essentially enter a the only way I can essentially enter two trades on a day is if it's a breakout followed by a double top or double bottom trade. So here you can see that we had both. Initially, we would have first had the breakout trade, because you can see the 15-minute broke below these areas here. Then you will go down. What time is this? This is 8:30. So you go down to the 1 minute time frame. You go to about 8:30, 8:45. Whenever it's gonna take me there. There we go. So it's actually, because we close at 8:45 here. Now you can see that there's no actual entry in and around these areas. So we wouldn't have taken the breakout trade just because we didn't create a level like after we had pushed to the downside. So we closed on this candle. You can see that no blue candle was actually created to then take the trade. So unfortunately, we didn't get that breakout trade. And that just happens. Now, we know that we didn't get the breakout trade, right? You're gonna essentially be looking for, can we get a push into our double top area and then a rejection out of the double top. And once you have this rejection, you are going to start looking for trade opportunities on the 1 minute. So that is 9:45. It's probably 10 o'clock. That's what we're going to be looking at on the 1 minute, sorry, 10 o'clock on the 1 minute time frame on Thursday. And this is perfect, right? So what you can see is price action came into this area. We pushed to the up to pushed up. We failed to make a new high here. Then we broke these key levels here. And this is the low of the previous 15-minute candle. You can see that the 15-minute candle that closed bearish closed on this candle right here. So your sell stop essentially would be, what is that? That's 710. So we minus 2. That would then take us to 690. Our entry point would be 670. And where would our stop loss be? That's 26. So we add 2 to that. That would be 28 pips. And we definitely get a break even, but do we get a 1 to 2? We would have gotten a break even on this trade, because you can see price action just about missed our 1 to 2. And yeah, so this would have been a break even trade, guys. Your stop loss would have been above these areas right here, and your entry below there. And this is just, I think this speaks to how much like the double top and double bottom trades have actually been working compared to the breakout trades. I haven't been getting that much like actual entries on breakouts anymore, and like also breakouts have been losing quite a bit. And so I've been very dependent on the double top, double bottom trades. And you can see that if I targeted these lows right here instead of targeting 1 to 2, then I would have actually hit TP for 1 to 1.7. But that's not in my plan. So we either target the lows, whichever. So it's the highest of the lows, the 15-minute lows, and 1 to 2, right? That's essentially what what my trade plan says. So we would have gotten a break even on that, and that's fair game. Do we get a second trade on that particular day? Do we get a second trade on that particular day? So we know that uh London session pushed bearish for some time. Do we have actual directional bias for New York session? Let's go through it. So we have a bearish candle on pound yen, then we have a bullish candle, bearish, 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 bearish. Okay, perfect. So now we're going to be looking at what the markets had actually done in that 11 to 3 o'clock session. We're looking for bearish trades, right? You can see that so we had already come into this area. We had already taken a trade out of this area, which is actual 15-minute market structure. This is our lows. Now we can't take a second double top out of that area. It's just not the way it works. Like you can't take trades out of that area again, because unless we broke these lows here and formed a new lower low, then we could have taken. So as you guys can see, we can't take a trade out of the double top area, and we unfortunately didn't form a lower low, and that's just is what it is. So price action had come into this double top area again, and you can see that price actually had broken structure, formed a new higher high, and you can just see that this whole session was atrocious, bro. It was horrible, and there's just nothing that we can do about that. Uh, and then price action proceeded to break, and I was anticipating this sell on Wednesday, Thursday, but unfortunately, I just couldn't get into it. It's outside of my trading times, right? It just is what it is. Now, let's go on to Friday. So you could see that there was a potential trade on Thursday only. Uh, and that's about it. Thursday, so we would have had one trade this week, a double top. We unfortunately didn't get the breakout on Thursday. We would have gotten the double top. So let's take a look at Friday. What did we have on Friday? We need to look at the daily for Thursday firstly. Daily for Thursday was pretty bearish. Let's go on to the 4H. The 4H for Thursday for Friday, sorry, at 3 o'clock was bullish, right? We had a bullish candle. Let's take a look at 4H correlation. Bullish, 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 and bullish again. Okay, so we pretty much have a bullish bias. We know that so that now we're shifting from week 5 to week 1 because it's on the 1st of November. You can, like, when I'm looking at my sheet, I can see that I have 67% chance that the next 4H candle will push bullish, and this is over a time frame of, let's say, a year and 8 months, a year and 9 months. So now after that, we know that we're looking for buys, so we're simply gonna be shifting down on time frames. Let's go to the first. We're gonna go to 7 o'clock and we'll do our analysis. 7 o'clock. And what you guys can see is that we had created this low, pushed to the upside, failed to make a new low right here, and then we shifted structure to the upside. Well, we didn't actually break structure, but we're showing intent to push to the upside. Now, usually after a big bearish push to the upside, there is a correction, or to the downside, sorry, there is a correction of that impulsive move. And whole day yesterday, I was targeting these points of interest yesterday. So I knew that there is a high chance that price action, especially with this clean structure to the left-hand side, that price action will push up into that. So we're looking for buys. My whole theory is that if price is in a push bullish, you buy. If price is in a push bearish, you sell. Pretty much, right? So we have these areas right here that if price breaks above in our times, essentially from 7:30 to 11 o'clock, we can trade that. You can see that we had a clear break above these areas right here. You jump down onto the 1 minute. What time was that? 9:45. We go to the 1 minute time frame. We go to about 9:45, 10 o'clock, and we start anticipating. So yeah, you can see that this candle closed above the 15-minute level that we failed to break above for some time. We have higher time frame directional bias in that it is a 4H correlation, and then all you're going to be doing is anticipating that price will push to the upside. So The highest point at this point in the markets was 825. Our buy stop will go at 850. Let's see where the stop loss would be. The stop loss would be on the anticipated low, and then you minus 2 points from that. So you can see this is 15.5. So minus 2 points from that would be 17.5. We round that down to 18 pips, and then you simply just go for a 1 to 2, right? And what you guys can see is that essentially, yes, price action moved quite a long bit, like quite a while to like sideways. But the fortunate thing is, let's see, RR, we would have gotten break even on this first push to the upside with these first couple candles. Break even in after the getting triggered. 1, 2, 3, 4 minutes. You get your break even, you chill in, and then price action would have hit your TP right after that. And this would have been my first breakout win in probably a month if I was trading, and the second trade of the week. So essentially, what would have happened was that I would have been at 2% for the week, which is quite good to know, just because like I have been taking a back seat with breakout trades specifically because it gave me hands in the 100K challenge. I am not even gonna lie to you guys. Specifically because I've been catching hands on the 100K challenge, right? So we have taken our win for the session. We can now walk away and let's take a look at what could have happened on the next session. Could we have possibly gotten a trade in the next session? So we know that this candle was bullish. Let's take a look at all other candles. Bullish, bearish, bullish, bullish, and bearish. There's no trading session. So basically, guys, what we would have seen this week is that we could have taken a break even on Thursday with a double top area. We could have taken a 2% with the breakout trade that we got on Friday. And that was that. I feel like that would have been a really good week in the markets if I was trading and if I could stay disciplined. 2% up is really good. Yeah, guys, I hope that you guys enjoyed this breakdown of how I actually break down the markets. And literally, even if I'm not making a video, I'd literally speak out all of my thoughts in the market so that I can see if I'm making sense with my analysis and I can hear myself back and just actively understand the strategy and understand like how price action is moving, where are the days that I can trade, where are the days that I cannot trade, can I take the trade, yes or no, and then just take the trade if it's there. And guys, the important thing about this exercise is that you are completely objective and just completely removed from your strategy. You can't be in the markets and take L's, and then when you do this, you looking for all W's. You can't be doing that. You need to actively understand that you're training your brain to recognize patterns. And the more you recognize the pattern, the easier it is for you to implement that pattern in live markets, the easier it is for you to see those patterns. And so when you do that, it's so much simpler for you to actually like take advantage of things and like understand how much trades you get a week objectively. Like this is how much trades I get in the week when like I follow my plan 100% of the time, and then also understand that not every day is a trading day. And this is what this exercise does for you. Not every day is a trading day. Ending the week up 2 to 4%, taking two trades that can give you 2%, obviously a break even and a 2%, and the one trade went up 1.7%. So like you really just kind of training yourself as a trader to be and act in a way that is best for your P&L. And that's what these exercises are for. It's not about saying, oh no, I would have targeted the point of interest here at the top. No, it's not about that. It's not about saying like, how do I optimize the strategy in this exercise? That's not what it's about. You optimize your strategy after reviewing your trades and actively making changes to your plan after a certain sample size. That's when you optimize your trading strategy. This is all about how could you have acted on what the markets have done in hindsight. So now you have hindsight and you can see what happened and you've traded it already, but you're forgetting about what you actually done in the markets. You're forgetting about human error and you're forgetting about all of those things. And all you're doing is acting on perfect knowledge, hindsight essentially. And trading your strategy. And whether it's a winning week or losing week, you're learning from that and you're getting better overall, right? That's all that you need to focus on and all that you need to do as traders. So from your boy Mars at the Modern Day Traders, thank you for sticking with me until the end. And I hope you guys learned how to do this exercise and just be truthful with yourself, hold yourself accountable, and just know that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. So from your boy Marcy at the Modern Day Trader. Peace out, man.